Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast today for a Wednesday, October 12th, 2022. We've got some phenomenal guests. We've got April and Sotero Lopez from eXp Realty. Welcome, April and Sotero. How are you guys doing?
Awesome.
Yeah, pretty excited to have you on the show. The podcast today, and got a lot of things to cover today. We've got our panel starting off with Becky Alley. Good morning, Becky.
Hey, what is up, everyone? Welcome to the Hardcore Mortgage Podcast. I'm super excited, man. Sotero and they are little beasts out there right now, just taking up territory, and I love being affiliated with them.
We love the energy Becky brings, and we have Mr. John Cole. Good morning, John.
Good morning, everyone.
Mr. Harvey Freed. Good morning, Harvey.
Good morning.
And the Google of our office, Miss Lisa Lawson. Good morning, Lisa.
Morning, everybody.
So jumping right into it, this show is brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, NMLS number for all you compliance and legal eagles out there, 2289. We are, again, an equal housing lender, been around a long time. And let's just jump right into it again. Current housing market, April. What's happening, as Al Roker would say, in your neck of the woods? What's going on out there?
Well, we do Macomb County and Oakland County, and the housing market, the prices are still up. They're still, up from last year. The number of houses that are hitting the market, there's more and more. And it's still going strong.
Yeah. You guys are loving it. Sotero, I want to expand upon that a little bit because I know you guys are a husband and wife team. You're out there knocking it out every single day. And I couldn't work with my wife because she wants my job. So therefore I couldn't work with her. So you guys you're really killing it out there. So what's going on out there?
Well, with this shift thing that people talk about, everybody's waiting for the market to crash. It's going to crash. And personally, we don't see any major crash, but as far as what's going on in our market, we cover like the Tri-County, we even cover like Livingston. So we have a pretty wide map, we really hustle. And there's more houses that's coming on the market, but overall, the value of the houses are up 3-4% of what the houses sold for a year before. So it's hard to really gauge or compare anything for the past 2 years during COVID because I liken it like you're cooking some rice and it's boiling and then it boils over and you turn the heat down so it simmers. That what happened the past 2 years is not even normal. It's not even a gauge. We might as well just cut it out of the map and just put it somewhere else and then blend 2022 with 2019 together. And then now let's talk about that.
Yeah, I'm so glad.
If only the
Fed,
Fed,
you brought that up.
If only the Fed would listen to him. The Fed,
I'm so glad he brought that up. I can't tell you how happy I am that you brought that up. Forget about 2020 and 21. And Becky Alley, you know what? We around here, I know that you, Harvey, Lisa, John Kolb, and I know April and Sotero feel the same way. I don't read bad news. I don't listen to bad news. I don't listen to the negativity, Becky Alley, because you want to know what? What did Grandma tell us a long time ago? Grandma told us people bought houses, Becky Alley, when interest rates were 17%. So what? They're not going to buy them when they're 7%, Becky Alley? Come on. We got to forget about this negativity.
Yeah, she said it's all about perspective. And honestly, what Sotero said, it was perfect. I mean, that was probably the best way that I've heard it broke down where, we're on a simmer. And when you're seeing that 5% appreciation, that's still an appreciating market. Okay. We're still in a situation where people are going to see price improvements. And that's really what it's about, right? It's that equity. You're still investing in yourself. And that's key right now. And the way that he just broke that down, I love it because he's right. Housing market, it's still going strong. And you are seeing those houses that are higher up. You're going to see those multiple offers happening. But at the same time, I just got a phone call from Accepted Offer where the purchase price was listed at $229. We just got in there for $210 with full 6% concession. So that was a $29,000 discount on that property. So it's a little bit of everything. This market is not just one thing.
Yeah, and it shouldn't be a negative because as I was leaving the office yesterday, and I stopped by as I always do, I said hi to Becky and we were talking a little bit. And Becky Alley, everybody out there and everybody listening, Becky Alley says, "Yeah, I have 8 purchase agreements I got to take care of right now." It's not, forget about the negativity. And Lisa Lawson, moving into your situation, when I say that, you're very familiar with Macomb County. You are the Google of the office. Things in Macomb County are still going gangbusters. I mean, Macomb County is really a hidden jewel in the Detroit metropolitan area.
Yeah, I mean, I live and reside in Macomb County. I'm in my house right now here in Macomb County.
But you look so cute with your glasses, by the way.
I have to have an eye exam in a couple hours, hence I'm not allowed to wear my contacts. So it's driving me a little crazy.
But I had to tell you.
Hey, Rose Sotero, Becky didn't say that to Harvey, John, and I, but that's okay. Go ahead, Lisa.
Yes. So, the opportunity in Macomb County is you can get a new construction home, in, $800,000 if you want to, or there's amazing starter homes in Roseville and East Point that you can get into for, in 130,000 or 140,000. So South Warren, it runs the gamut. The opportunities in Macomb County are countless. And, like you said, it's a hidden gem. I always agree. That's part of the reason I live here. So, take the opportunity wherever you are in the scale, whether you're moving up and buying a second home, or you're trying to get into that first starter home, take the advantage of Macomb County and what it has to offer.
Yeah, and John Cole, we want to talk about, Sotero hit on it. Property values are still going up. As a matter of fact, the Fitch Rating Service said that property values through third quarter were up over 12.2%. But then they had to throw in the negativity, right? Overvalued, okay? What does value really mean? Value, as you know, is what a buyer and seller, when they come to an agreement. Now, appraisal is a different situation, but I'm not going to get into that. The housing market is not going to crash, John Cole, correct?
No, they've got too much in play to have the housing market crash. The other thing that I'll tell you that it's not going to crash is that Fannie Mae and Freddie Mac have already announced that they're going to be increasing the loan limit from $647,200 up to $715 for 2023. FHA will follow suit at 65% of that. And the economists for the GSEs are not going to allow a market crash, and if they're also going to increase the conforming loan limit, they want more loans under their umbrella versus less. So there's just a lot of indicators that the housing market's not going to crash. What's to be seen is how idiotic the Fed continues to be and increase the interest rates, and how bad the recession will be, and what they'll have to do at that point by slashing interest rates. But history tells us what's going to happen. It's happened before. It'll happen again. And you know what? The housing market will take a little bit of a hit, but it's certainly not going to crash.
Yeah. Well, John, I'm going to go to Harvey on this one. And Harvey, I'm going to make fun of myself. I lived through the early 80s when interest rates were 17 and 18% and people were getting mortgages, and we're certainly not in that territory. Historically, by the way, everybody, except for the years that Sotero said, forget about 20 and 21, a 7% rate historically, Harvey Freed, is not a bad rate. We just got used to those crazy low rates, which, by the way, Harvey Freed, if prices stabilize and the rates stay where they are, people are going to make that up because the prices are actually stable now, and people are going to be in the market. There's going to be less competition. And Harvey Freed, as Becky Alley said, full seller's concessions, Harvey Freed?
Yeah, the market's changing, definitely. I like that analogy of boiling rice or noodles. I got that in my head still. But at
So good.
$300,000, if you got a $300,000 house out there and it goes up 5%, you're talking $15,000 a year. After 5 years, you're at $75,000 in appreciation. That's really a nice looking number. So I think what we're feeling right now is still this appreciation. The sellers do want to get top dollar, although they have to be reminded from all our top agents that it might not be that crazy 2021 marketplace. So we do see offers coming in a little bit closer, not over asking. And then we are starting to see some appraisal issues creep up in our ugly world of lending. And the reason why is because everyone wants the top dollars, that fantasy island they had in 2020 and 2021. Again, The sellers need to hurry up and get their homes on the market because they're going to be buying a house also. So they're going to make it up when they go to buy that next house.
Right. So April and Sotero, I can't make this stuff up. That's why I have it in writing. It's right here. You're not gonna believe this, right? Housing Wire magazine. You ready? I'm not kidding. Dated October 11th, which was yesterday. They came out with this news flash, everybody. The key to selling homes in this market is price.
Oh my God. I think I'm gonna make a post about that today. I'm gonna make a post. I'm gonna send you people that like it.
All right. It's right here. I can't make it up. Let's just forget about the price aspect of that. What I would say insane headline is, as Becky made direct mention of, it's not only price, April and Sotero, it's maybe some seller concession. Maybe the sellers are gonna offer to pay points from a borrower, closing costs, to get the rate down a little bit. But really, anything to make a transaction work within reason, we're seeing it's more flexible out there now, right?
Yes. Yeah, more flexible, more, like I say, if you cut and paste out 2021 and 2022, it's going back to where it used to be. So, no more skipping inspections, paying overpriced or the appraised value, none of the insanity, that's going on right now. And so we've seen it just going right back to more, and I'm thinking about what you said earlier, Harry, about overvalue. It just made me think about, what is overvalue? Like you said, like I personally think a car Maybach is overvalued. Like, I don't know what else they put in that car to make it cost $1 million. But somebody's willing to pay $1 million for it. So it really doesn't matter. So the people, what they're willing to pay is going to determine the value.
Yeah, it does. It really, you can put a price tag on anything. And if there's a buyer for it, somebody's going to buy it. But once again, as Harvey said, and Harvey and I are going to take a field trip after lunch, after the podcast, and we're going to go check out a house that maybe is overvalued, but somebody bought it. We're going to go look at it firsthand because I've got to educate myself. And I love driving neighborhoods, and that's what Harvey and I are going to do. And April and Sotero, I want to ask you this question right now. Where do you see the market in your area, that specifically to you, headed in? Now we're in the fourth quarter, so by the end of this year, heading into the first quarter. Do you think prices are going to stabilize? Do you think that there's going to be an increase in the amount of homes that come on the market? And because there's still more buyers out there than desirable properties out there, correct?
Correct. I don't see any decline, because I look at overall patterns. Like, that's just how I look at life. Like you say, you don't get caught up in bad news. I don't watch bad news. It's like, okay, give me something else. The last time there was a major crash was 2008. Before that, 1930, the Great Depression. Before that, 1873. Before that, 1837. So if it took from 1930 to 2008 over 100 years for a major crash to happen, if it happens again, we're going to be dead before it happens. We won't even see it. So what's going to happen as far as like when we live in Macomb County, I'm seeing like Sterling Heights had an uptick in like listings, like double. It's just like an uptick. So more inventory is coming out. People are selling their homes. People are moving to the area. It's going to slow down a little bit because it's getting cold, but it's going to be great. Like, I don't see anything decrease. I see more of a stabilizing or normal or maybe a little bit of increase, because overall houses appreciate 6% every year. That's another thing. Doesn't matter. I don't care what time, what interest rate. Every year, the house appreciates 6% every year. The last crash, 2008, before that, 1930. So that's what I look at. That's where I place like my hope in that.
Yeah, Becky, it's certainly a different market now than 2008, 2009. We had a triple witching hour where houses were depreciating. People were getting laid off in numbers. And, we had a foreclosure situation. We're certainly not in that. As a matter of fact, we're in the opposite. The vibe that I'm getting and the energy that I'm feeling in the market right now is those who are sleeping those who snooze lose, and the ones that aren't like us running around every day doing more business. So we're capturing the market share. And Becky, let's speak to that market share right now. You're certainly very, very busy and looking to do more. We're not looking to do less. We're looking to do more.
Yeah, I mean, talk about 2008. I mean, there was a lot of things happening in that, but most importantly, people were totally overextended on their mortgages, and some people were just walking away for the simple fact of, I can buy my neighbor's house for $50,000, so I'm just walk away. There's a lot of ignorant mentality during that time that just exacerbated the situation. Now these are very well qualified mortgages. There's a lot of cash happening in this market, even still, right? You're still seeing those cash offers, but at the same time, when is the best time for someone to buy a house? When it works for you, right? There's always a time to buy a house, and it's up to the individual and what's happening with them. And so they're getting hit with these rent letters, right? There's a lot of people that are people are reactionary. They're seeing the rates going up, and now they're finally like stepping into the market. But at the same time, those are first-time home buyers that are seeing the value in themselves now versus paying this rent, because these landlords are not playing. And these investors that see the patterns that Sotero sees, they're going to gobble it all up, right? Because they know that millionaires are made in a down market, and they're going to gobble up all the properties they humanly possibly can. So if the buyers, the first-time home buyers, if they don't see that, they're going to end up renting, and then they're going to pay double what they would pay if they're paying on their own. So, it's all about waking up. I'm definitely not asleep. And, you can see the difference between the lenders and the real estate agents that are also reactionary, like some of our clients, right? They are now realizing things are happening. They wait for the change to start adapting when you need to already be ahead of it. Like, I'm already looking 10 miles down the road, I'm on my next move, right? And that's how you have to be in this market. And Sotero and April, they're just the same. And, we're here to help people get into home ownership successfully. We got all the down payment assistance programs that allow that to happen. You got to be unique. You got to be ahead of the curve, and we got to find ways to get people in these houses. And that's what I pride myself being affiliated with Capital Mortgage Funding and the high caliber agents that we all associate with, because we're all on the same page, reason across the aisle, shaking hands, kissing babies to get everyone to the finish line, for sure.
Well, I will tell you this. So we just got the video back from the event that we held back in September, and the video came out awesome, Becky, and I want to thank you for that. The event was great. I know that we had a lot of great realtor partners there. The realtor panel was phenomenal. And Segue, I just had to throw that plug in there. So we took the Hardcore Mortgage Real Estate Business show on the road, had great reception from everybody. We've got a video. It's about 2.5 minutes that we're going to put out on social media so everybody will see it. And again, it came out great, and I was just honored and I'm blessed to be part of it. It was wonderful. Lisa Lawson, Becky went right into first-time homebuyer programs. Let's talk about the MSHDA program, which is below market rates. There's a DPA component to it. Talk about how great MSHDA is for first-time homebuyers.
Yeah, MSHDA has been one of my favorite programs to utilize for decades at this point now. A lot of people called, especially, a couple of years ago, I think word's starting to get out that there's closing costs, but back in the day, we'd get calls all the time. I saved 3%, or I saved my 3.5%, I'm ready to go. They didn't realize that in Michigan, we have what we call prepaids, right? We prepay our taxes in advance, and you have to pay homeowners insurance in advance, and closing costs and title work, and they'd be short. And we started utilizing that program, or I did, really to help people. So they'd save the money, and then the program would pay all their closing costs and everything else. Well, now that program also plays down payment, and it allows people to get into a home that couldn't otherwise. So I think it's a really important program. Depending on where you're buying, it's either $7,500 or $10,000. It's a lot of money to go towards your closing costs and down payment and get you into that first home.
Yeah, it's wonderful. It's a wonderful program. It's a great starter program. And then, we move a lot of families in there. And then the referral situation that comes out when you're holding a first-time home buyer's hand. And I know April and Sotero, you do that as well. When there's nothing like a first-time home buyer, and they're so excited, it's great being at the closing, and it's just really a magical moment. It can't beat that feeling. But I want to get into something with John Cole, because John loves talking about the Fed. He loves talking about interest rates. Rates went up from 2.5 to over 7 within an 8-month period of time. John and I talk about the Fed all the time. Yes, it's irrational what they're doing. They're overcorrecting. listen, there was an overcorrection when rates went down to 2.5. They went down too fast, and now there's a correction the other way. John, I'm just going to ask you, when do you see the Fed stopping this?
We'll have one more increase this year. And then I think that you'll after that increase, we already saw the UE, step in asking them to stop increasing interest rates after this last increase. The Fed won't listen. They'll do it one more time, and then the world will start to really kind of pitch a bitch towards them. So after that, I think you're going to start to see them, taper off and or cut. And that's just part of like we were saying, Harry, you and I have exchanged some articles back and forth about how this has happened historically. And the last time it happened was 40 years ago, and the same patterns, how they don't see it, but we see it, and the news sees it. But the Fed doesn't see that they're following the same patterns and the same outcomes are happening. I just don't get it. So I think by the first quarter of next year, you'll start to see some cuts. What does that mean? Probably mean some, slightly falling interest rates and probably slightly falling housing prices.
Yeah. Harvey Freed, I'm going to go to you, and then I'm going to go back to April and Sotero. Mr. Harvey Freed, you and I are going to go ahead. We're going to take a little field trip today. We love driving in neighborhoods. We love going out. We love being in the street. We're all about being on the street. Harvey mentioned, and you did, Harvey, directly, that we're seeing a little bit of pushback from appraisers on houses. I think that all stems from the sales of that particular area. Harvey, I know that we talk about appraisals and appraised values all the time. What kind of helpful hints can you give to realtors that maybe April and Sotero already do, but shouldn't Harvey Freed, a realtor, a listing realtor, go ahead and meet an appraiser at a house?
Yeah, 100%, Harry. We always like that. Some of the appraisers have said, one of our friends, Mike Tomczyk, said he doesn't need anyone there. But I still think if you're there to assist, whether it be with the comparable sales or pointing out that there's maybe an air-conditioned condenser that was removed from the property, or small little things that can really add to the value of the house, I think it's worth any listing agent. Times are a little slower, so I think it's worth their while to definitely meet the appraiser at the house for best results.
Yeah, this is the Hardcore Mortgage Real Estate Business Podcast for a Wednesday, October 12, 2022. Our special guests, April and Sotero Lopez, eXp Realty. And we're going to give you the last word today, because we want to wrap it up. I want to give you guys the last words for the day. We're going to go around the panel. We're going to wrap it up. But this has been such a great podcast full of information. Unfortunately, we only have 30 minutes to do it. So we're going to have you back so you can share all the knowledge and wisdom that you have in the market. April, go ahead.
Okay, well, I don't know how to close it out. I really enjoyed it. It was really fun. It's always great talking about the market and just educating people how, they think the market's going to crash and things like that. So this was really good, and a lot of information that people can use.
We really appreciate that, because we know it's the realtor community that's out every day. You're looking at properties, you're showing properties, you're listing properties, and really the value that you provide the consumer. Look, at anybody can try to sell and buy a house on their own. Yeah, is it done? But how about this? 92% of all sales are done with a realtor. That's what I'm talking about. So, if you want to be one of the 8%, go ahead. But there's a reason why 92% of all sales, Becky Alley, are done by a realtor.
100%.
For sure. Yeah. And that's why, like with Sotero, man, you talk about his thing is you hire a pit bull, not a poodle, right? So I want him to touch on that a little bit, because my man's out here, he's doing the thing. So.
And Becky is a beast. Like, Becky is a beast. She's awesome. I mean, I don't even know how she does it, but she can solve the problems. I mean, you guys do the Mishta, like all of you got every tool at your disposal. She's licensed in multiple states. I got people in other states, like she'll get it done. And, I get a lot of influx of investors. And so we're like, Becky, you want financing, you want to talk to Becky, because she knows how to get it done.
No,
we appreciate that. And she is awesome. And Becky Ellie, go ahead, take it away.
Thank you. I mean, that's like obviously the highest compliment one can hear. I mean, but the feeling is mutual for you guys because I see what you're doing versus what other people are doing. And you're really out there grinding. And this is that kind of market where it's that old school mentality. It's boots on the ground. You got to get in the mud. You're going to have to get dirty a little bit. You have to be creative, but you also have to know how to have those conversations with the other side, right? So, and who you work with matters. And you hear us say that on the radio show, on our podcast. And the reason for that is because it's true. There's so many first-time home buyers that have got the runaround, and we might not have been the first call, but everyone knows that if you call us, we're the last call, and we're going to get you to the finish line. And I just had a closing with a different agent yesterday, and and I'm bringing this up because it's a true success story of. She was with a bigger big box bank, and they started their housing in December 2021. They started looking for homes. And so now you're talking in May, now I'm finally getting involved because things were just going awry. So then I couldn't get the appraisal transferred. It was a MSHDA transaction. This is our first time buying a house and all that stuff. So then we eventually had to let that other house go because they weren't transferring what I needed to move on. Ultimately, fast forward, we got under contract, we got a MSHDA transaction, and we closed it within, I think it was 50 days, which is great, right? And especially with MSHDA taking 3 weeks by itself on the underwriting time. So, those kinds of things and us knowing how to, finesse through those waves. And Lisa is obviously she is the guru of MSHDA. All hail Lisa Lawson on that one, but I'm proud to be affiliated with great people.
Excellent. Lisa Lawson.
Well, thank you, Becky, but we all do amazing work. And, I may have do a little bit more MSHDA, but that doesn't make me any more knowledgeable than anybody else like yourself. I mean, obviously, you know what you're doing, beast mode, constantly 24/7, grinding it out. And that means offering not MSHDA, but every other type of loan program. You and I've saved other deals, utilizing other programs that most lenders don't even know exist.
Yep.
And that's part of education. That's part of staying relevant, being in touch with agents, finding out what agents need for their clients so we can all work together so these people can get into the homes that they need.
Yeah, we appreciate that. We do specialize in taking care of, bad throat, taking care of the client, making sure that we have all the right answers. If we do not know an answer, we will find it for you. It might take us a little bit of time. We might know it off the top of our head, but the research and the availability of all the products that we've had for over 30 years in the mortgage banking industry is second to none. We will go to all depths, and I can attest for Lisa, for Harvey, for John, for Becky, for our entire staff that we leave no stone unturned. We'll go to the ends and make sure it happens. Most of the time we can get it done. I would say that we've got a pretty good in the high 90s success ratio, but sometimes we're not perfect. We don't claim to be, we just claim to give everybody 100%, 7 days a week, 365 days a year. April and Sotero, I don't know what happened to Harvey. I don't know what happened to John. They took off. Maybe they're busy, but what I'm going to do is I'm going to thank you and really appreciate the fact that you came on to talk to us today to spread your knowledge and your enthusiasm for what's going on. It's only positive. Remember, people were buying homes when it was 17, 18% in 1981, 82, and 83. Okay. I know nobody wants to hear that. That might be get off my lawn guy talking. But I will say this. I just don't like all the negativity associated in the market. There's so many opportunities out there. All you have to do is work at them. So for April and Sotero Lopez, Becky Alley and Lisa Lawson, Roberto Beauchene, our producer director in the booth, there he is. He's looking at us. We can't see him. Maybe we can, maybe we can't. But we appreciate you coming on the Hardcore Mortgage Real Estate Business Podcast today, Wednesday, October 12th, 2022. And we'll see you soon.